You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from a futures options perspective. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we tend to think so, Options Insider Radio Network. Reminding you, of course, if you like what you hear, coming off the hottest month in the history, 15-plus year history of the network, we want to keep that trend continuing, especially for TWIFO. A lot of folks piling into TWIFO over the course of the past month. Leave a review on your platform of choice. It clearly does help new folks continue to discover the program who are all trying to learn about these markets together. And then, of course, if you want to go above and beyond, you want to check out what's cooking over there on the exclusive Pro podcast feed. You want to get, of course, your name in the hat for all sorts of giveaways, as well as all sorts of fun out there, including live streams and all sorts of other fun. TheOptionsInsider.com is the place to go. All right. And of course, you know to go. TheOptionsInsider.com/pro is the place to go to check out all of that exclusive content, live streams, everything else that we have cooking over there on the network itself, listeners. And now I do believe joining us in the CME Group and FTSE Russell hot seat, we have Mr. Rich Excell, the professor of finance over there at the University of Illinois. Rich, are you there, sir? Can you hear me?
I'm here. Can you hear me okay?
Yes, we hear you fine. All right, perfect. The magic of technology, Rich, in this digital age. We have all these wonders at our fingertips, and still at the end of the day, have to resort to the old standby of telephone. But at least we got you on the show as we keep on rolling right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the upside, aka the light side, and to the dark side over there at CME Group this week. And it was a mostly green week, I would say. It looks like it's around 60-40 green to red across the broad spectrum of products over there at CME this week. I'm sure if we re-rack these right this second, maybe it would be closer to 50-50. We are seeing, of course, a lot of red out there in the equities right now. That tends to drag down a lot of other products with it. Crypto, to name not just one out there, but a lot of fun to be had. Rich, you know how we kick off the show here. Where should we begin our journey this week, to the light side or to the dark side?
Just kind of staying in the holiday spirit. Why don't we go with the light side?
All right, let's stay in the green. We can do that right now, listeners. Interesting. We have not really seen this before to this degree on the show in quite some time. We may see 3 products dominating the light side of the dark side from one complex, maybe 4. This week, it is a rare moment where the entirety of the light side, all of our top 5 movers and shakers this week, all coming from one complex. Can you guess which complex it is, listeners? I'll give you a hint. Begins with an E, ends with a Y, has a nudge in the middle. Yes, it is energy here, listeners. All energy all the time to the upside this week. We start with number 5. It's got Brent up nearly 4%, 3.99%. You know the deal, not a ton of paper going on in Brent over there at CME. Number 4, it's Nat Gas, up 5.41%. It was number 1 in the other direction last week to the dark side, off nearly 22%, 21.68%. So a wild couple of weeks for Nat Gas. Number 3, it's WTI, up 7.33%. It was number 5 in the other direction last week, also off 11.5%. So just a roller coaster couple of weeks for all things energy, listeners. Number 2, RBOB, up 8.08%. Number 4 to the dark side last week, off 11.89%. And number 1 to the light side, heating oil, up 11.75%. Number 2 in the other direction last week, off 14.59%. So heating oil almost managing to erase everything that it gave up last week. And Nat Gas still has a way to go just to make up what it dropped last week. So let's go to the dark side now, see if we have the same kind of dominance. And the answer is no, listeners. Bit of a mixed bag out there on the dark side. You got some ag, got some metals, even some FX. Haven't seen FX on the movers and shakers in some time. Number 5, heading out to the peso, listeners. Peso USD off 2.34%. Dare I say it? We're going to get FX on the show this week? I don't know. Stay tuned. Number 4, we've got soybean meal. That one's been a frequent offender, been on the show for a couple of weeks now, off 2.36%. It was number 1 in the other direction last week, up 8.3%. Number 3, still staying in the ags, it's lean hogs, off 2.8%. That one putting up more paper than it has in the past, so perhaps we can hang out there. Number 2, palladium, so off to the metals, listeners, off 3.46%. You know the deal with palladium. Not a ton of options paper to parse there. And then number 1, one of our frequent offenders, it is lumber, so going back to the ags, hanging out in the softs, off 5.82%. It was number 2 in the other direction last week, up 4.38%. So lumber doing what lumber does, rocking and rolling in one direction or the other. Again, unfortunately, CME launched some mini contracts, so they're trying to drive up some new paper in lumber. But for whatever reason, lumber, not a huge options story yet. But you know what is a banger of a story this week, listeners? It's energy. So let's head out there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful world of energy. You folks know where to go to find these reports for yourselves. CMEgroup.com/TWIFO, TWIFO. That's, of course, the name of the show this week in futures options. Once you go there, you will find this nice drop down for you. Just scroll down 3 slots to energy. And then Rich, it's kind of an embarrassment of riches this week, pun intended, out there in energy. So where should we start in the energy complex this week? Which product is catching your attention the most?
To me, I always want to start with WTI. I think WTI and Brent, I look at them together, and they're a lot of the kind of the similar kind of crosswinds that are going on here between the potential U.S. recession. What does that mean for falling demand? But maybe the reopening of China. What does that mean for rising demand? So I always want to start, when I look at energy, I always want to start there.
All right, we can do that. Go into that drop down, listeners. Again, go to energy, which is 3 slots over. Then go into crude oil. And then we hang out in the product, which is, of course, WTI. Coming into showtime, 76.62, up 5.6%. Again, just since Monday's session, you go all the way back to the end of the show last week, up 7.33%. So a nice little pop here for all things energy. As Rich is right, the market grapples with these two opposing forces, Chinese demand versus a potential recession. What is winning this week? It is the upside that is winning. How much paper is on the tape right now in WTI? It's a decently active week, right around the level you'd expect. 430,000 contracts on the tape right now for WTI. And of that, WTI trading like an equity, I should say. It is the Jan contract that is going away any minute now, listeners. That did 32% of the paper. My goodness. So equity reminiscent out there. We should parse this before these contracts expire and we have to re-rack this report. But before we get there, Rich, what's been catching your eye out there in the world of crude oil this week?
Well, to me, the most interesting thing in crude oil, I talked a little bit about China demand versus U.S. demand, but when you talk about, one of the drivers in crude this year has been the releases from the Strategic Petroleum Reserve. And are we, getting close to that level where the administration might look to refill the SPR? They had indicated if it got below 70, they would, and we kind of got close to 70 and bounced pretty quickly off of there. So that to me has me perked up and has me thinking that maybe some optionality around that $70 level is kind of an interesting way to play it.
Nice of the government to give the markets a nice support level right there. Here you go. 70 is what we're aiming for. Traders love that out there. But you're right. They had kind of emptied the tank, pun intended, out there on the Strategic Petroleum Reserve. So they do have to fill it at some time. Below 70, definitely better than above 100, where they were dumping a lot of it out there. So government at least winning on that trade, which is good listening. Let's see what other trades are lighting it up out here this week. Like I said, 32% of the paper going up in the contract that goes away any minute now. We obviously, hard to analyze that from a skew and vol perspective, listeners. If you are wondering, that contract is going to go away at about an 82 vol. And the puts, the skew, I should say, puts last week 1.7% cheap, this week 3.4% bid. The calls last week 3.9% bid, this week 3.4% cheap. So big evolutions in the skew. We have to go a little bit farther out to find a contract that has a little bit more time to go. Instead, we're going to go out to the February contract, listeners. That has 33 days to go. The vol out there, a much more reasonable 43.5, off nearly 5 points, as opposed to the nonsense 82 vol. Again, that's not really vol. It's going away in about 30 seconds. In terms of skew on the Feb contract, the puts 4% bid last week. This week, 3.8% bid. So not a ton of evolution there. The calls last week, 3.4% cheap. This week, 4.3% cheap. So we're seeing a little bit of a mini equity skew perk up here in WTI. The puts slightly bid, the calls slightly offered. In terms of action, though, it was the February contract that saw the most active contract this week. It was the 70 puts. Again, Rich, going back to that line in the sand you were just talking about that the government drew at the 70 strike. We have 19,300 of the 70 puts in February going up this week. The big day today. Folks are loving the 70 puts today. 13,300 of them going up today. About 2,800 on Tuesday, 2,000 yesterday, and about 1,000 on Monday. Opening earlier in the week, closing on Wednesday. Obviously, looks like today's paper, there's only 6,000 open coming into today. So today's paper has to be opening. So a lot of opening paper on this 70 put strike, which again kind of goes to reinforce that level that Rich was just talking about. Beyond that, we also saw 75 puts pretty active in the Jan contract. Again, this contract is already pretty much rolled off the board. So I can't even click on it to see it anymore. So that's how near dated it is. But a total of 9,000 of those went up this week. We also saw more paper going up out here in the Feb contract to the tune of the 90 calls. So it's not all puts all the time. It's just mostly puts. 10,200, the 90 calls going up, the big day for those Wednesday. 3,800, Tuesday, 2,800, today, 1,700, and Monday, 1,800. Back and forth, opening to closing all week long on these 90 calls out here. Looks like 90 calls were also active in March. So a lot of action on the 70 puts and 90 calls this week, listeners. 70 puts, I get 90 calls. An interesting selection out here. Again, 9,600 of the March 90 calls going up out here this week. I'm just trying to scroll to see if I see any other interesting and or aberrant paper. How about if I told you 9,300 of the DEIS 2023 150 calls also went up this week, I should say. Now it looks like they pretty much are going up by themselves. We're getting a little bit of slow data on here, the report. I'm going to just refresh it really quickly. Technology, not our friend today on the show. Listen, let's see if I can get, there we go. See if I can get updated numbers now on these DEIS 150s. There we go. All right. So they were trading pretty actively all week long. 3,200 on Monday, 3,000 yesterday, and 3,000 again today. So back and forth opening to closing all week long. Looks like it was also a 140, 150 vertical that traded 3,000 times yesterday and 3,000 times today. So funky verticals, 70 puts, and 90 calls lighting up the tape out there in WTI. Is that pretty much what you expected, Rich? I mean, the 70 puts make some sense. The rest of it, maybe not so much.
Yeah, I would agree. The rest of it doesn't really make that much sense to me, other than if there's some kind of tail risks that someone's trying to protect in their options portfolio, or maybe some sort of digital that a customer wants to put on around a potential reignition of some geopolitical risk in Europe. I don't know. That one's got me kind of confused. I'm not so sure why I'd be looking at the 150 strike myself.
All sorts of fun lurking out here in the TWIFO reports, listeners. So you got to check them out for yourselves as we hang out in the energy complex. One of our 3 frequent offenders every week, listeners. If you guess either Bitcoin or lumber or nat gas, chances are you're one of those is going to be in our movers shaker. This week we have 2. We have lumber and nat gas. Unfortunately, lumber, again, not a big options player, but it does move. And then the other one, of course, nat gas. This one's just been all over the place last couple of weeks. Like I said, last week, number 1 to the dark side, off nearly 22%. This week, since Monday session, is up 10.3%. Coming into showtime, is at about a 689 in that front contract. Also, a ton of paper hitting the tape in nat gas this week. Usually, we see nat gas similar to WTI, somewhere between 400, let's say 440,000 contracts. This week, 544,000 contracts. So nat gas, quite literally on fire out there this week. And in terms of action, pretty much 33% of the paper, again, kind of like crude oil going up in that contract, that front contract. This time we have a little bit more time to go, though. We have 12 days to go, as opposed to the imminent expiration of the WTI contract that we saw just went off the board. I couldn't even click on it anymore. Rich, when you're not busy watching WTI, you pay any attention to nat gas over there?
It's tough not to think about nat gas a little bit, especially with cold weather that's hitting the east coast of the U.S. and the cold weather that's coming into Europe. And I'm sure there's some people trying to speculate, what policies are going to be announced to kind of make sure that doesn't happen in Europe again. So I think, there's a lot of, I'm probably the sucker at the card table when it comes to nat gas. So I'm not going to, go into it too much, but it seems like it's just that time of year with a lot of the cold weather coming in. It's top of mind for a lot of traders, I'm going to guess.
So if I can read between the lines there, Rich, sounds like you're telling everyone buy all the nat gas futures they can at 690. That's your trade of the week, sir? Load up.
For educational purposes only.
For educational purposes, yes. Let's see what folks are trading out there this week, listeners. And we're hanging out at about a 690. So you might expect something in the 6 put and 7 call range. And that's pretty much exactly what we're seeing out there this week. Like we said, 33.3%. So exactly a third of that 540,000 contracts going up in the Jan contract. And of that, it was the 6 puts leading the dance, nearly 20,000 contracts, 19,400 to be precise. These things are trading pretty actively all week long. The big day was Monday, 8,300 on Monday, a bias towards opening there, 5,500 on Tuesday, 3,200 today, 2,300 on Wednesday. Looks like back and forth opening to closing on this 6 strike all week long. Makes sense. They were near at the money puts on Monday. Right now, a little bit farther away from the money. And then we have the 7 calls right behind it with about 14,400 contracts going up this week. Again, the big day, Monday, 8,800. So Monday, the big day for the 6 puts and the 7 calls, mostly opening on Monday. Then we saw about 2,500 going up today and about 1,600 on Wednesday, 1,400 on Tuesday. It's like mostly closing through the middle of that week. And then today's paper, no idea because there are 14,000 contracts open coming into today. So who knows what that 2,500 lot is up to. But intriguing stuff nonetheless. 6 puts, 7 calls going away in a couple of weeks. That makes some sense. Nat gas tends to whip around. And so people like to have near dated contracts out here. I'm not surprising they want to trade a bunch of the high gamma stuff out here. Right behind it, we have the 5 puts. So those looked a little bit more reasonable last week, perhaps, than they do this week. Probably why maybe some folks are bailing on these this week. 13,300 going up this week. The big day again Monday. 7,400 going up on Monday, mostly closing. 2,200 on Tuesday, again closing. 1,500 on Wednesday, again closing. And then 2,300 today. So folks bailing on the 5 puts, maybe some rolling action as well, rolling up to the 6s. Either way, a lot of closing paper on the 5 put strike. And then if 7's not optimistic enough for your blood listeners, allow me to present the 8 calls also going out in a couple of weeks. Almost 13,000 of those going up this week. Once again, the big day was Monday, 4,800 on Monday, 4,600 today. So no slouch today. And then 2,000 yesterday, 1,200 on Monday. Looks like opening all the way through most of the week until today. We don't know about today's paper, obviously. And then if that's not exciting enough for you listeners, you want to go a little bit farther out in terms of time and a little bit farther down in terms of strike. Allow me to also present the 3 puts. The April 3 puts did 14,600 contracts this week. Oh my goodness. Almost half of that going today. 7,700 going up today. 3,000 on Wednesday. 2,600 on Monday. 1,250 on Tuesday. Doesn't seem like there's much vertical action there. It seems like this is just straight up action on these 3 puts. So, wow. That's 3 puts in April. Normally, seasonally, I'd say that makes a lot of sense. These days, who knows? Nat gas, all bets are off. So, intriguing. Like that, listeners, April 3 puts, someone's traded them up to the tune of nearly 15,000 this week. So they would be firmly at our pretty much number 2, if not number 3 spot. Yeah, actually, they do barely edge out the 7 calls going out in January. So they would be the number 2 most active contract in nat gas this week. So 3 puts. That's interesting. Of course, we have also seen that put strip that's been trading for a while, listeners. That also is on the 3 strike this week. So we saw 5,000 of the 3 puts trading in pretty much every month from April all the way out to the end of the year. So maybe that's why the 3 puts in April was so active. We got 5,000 of those going up plus whatever else was going on out there. So maybe a little bit of a combo out there. But either way, 3 puts and 6 puts leading your dance out here this week in nat gas. Man, we could probably do the rest of the show just on what's lighting it up out here in energy. But Rich, we are coming off the heels of the Fed announcement. He's wreaking havoc. Powell wreaking havoc out there with the equity markets. I know you've been paying a lot of attention to the equities recently as well. So let's head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the wild world of equities these days. A lot of red on the screen out there right now, listeners. Most of the major indices, when we kicked off the show, at or near 3% to the dark side out there. Looks like the sell-off maybe mitigating a little bit now. It's being only off a mere 2.5%. Now, of course, you want to find this for yourselves, listeners. Head on over into that report. Go to the drop down, pop out of energy, go down 1 slot to equity indexes, and then pick your poison from there. We're going to hang out in the Russell 2000. You could pick any index that your heart desires. Listen, we don't judge here on the TWIFO show. Before we get into all the nitty gritty, let's set the table from a vol perspective. May surprise you a little bit, some of these numbers, given what we're seeing out there in the equity markets today and what we're seeing on the vol front. Coming into showtime, we had RVX, so the VIX of the Russell 2000, 2630, up a mere 0.4 on the week. VIX cash itself, 23 and about a half, almost 2360, up about 1.2 points. So VIX, as the sell-off has continued, starting to come to life a little bit. But then again, all of you out there who've been playing in some vol upside, maybe hoping for a bit of a VIX pop, so far, it seems like this is about all you're going to get out there. Vol, very muted, at least when it comes to its response to this latest wave of sell-offs here. VVIX, the vol of vol itself, right around a 93, up about 8, almost 8.5 points from where it was this time last week. Vol Q, so the at-the-money vol of the NASDAQ, 26.5. That's down a full point. I mean, NASDAQ vol has been wild for some time, so NASDAQ vol still down on the week, even after all this movement. NASDAQ was off over 3.5% at one point today. That puts that VIX to RVX spread, so the large cap to small cap vol spread, right around 2 3/4. That's about 3/4 of a point tighter than it was this time last week. The VIX to vol Q spread, so the NASDAQ to S&P vol spread, almost exactly a 3, about a 295. That's a little over 2, about 2.15 points tighter. That's a heck of a move. And that spread out there, predominantly because VIX is moving and NASDAQ not so much. So intriguing stuff out there. All right, Rich, a ton to unpack on the equities front this week as well. Of course, we had Mr. Powell this week, really seeming to spook a lot of people. So maybe let's start there. What are your thoughts on what you saw out there and what you heard out there from Powell and ilk? And then I know you've been slinging some interesting equity trades. What's been lighting up your tape over there on the equity options front this week?
So yeah, you're absolutely right. I mean, Jay Powell was part two of a two-part story this week. It was a full range of emotions for equities, wasn't it? I mean, we got the CPI, which was softer than expected, and then Jay Powell came in and spoiled it. And I've been kind of talking about it for a couple months now, the idea of a Twin Peaks as being the key for equity investors to potentially see some upside. And the Twin Peaks being a peak in inflation and then a peak in Fed hawkishness. And I think after the CPI report, which is came in at 7.1. I think there's this expectation that we'd probably seen the worst we could from the Fed, and now we're seeing the inflation really starting to roll over, and this was going to be a good setup for the equities into what is still kind of the tail end of a seasonally strong period for equities. But then Jay Powell came out and said, not so fast, right? And so I personally didn't think that was that surprising what he said, because all along Jay Powell has been talking to us and telling us to watch financial conditions. And within the inflation numbers, Jay Powell's kind of broken it into three parts, right? The goods inflation, which has been coming down, the housing inflation, which has been coming down, and then the non-housing services inflation, which is what he's really focused on, which is another way of saying the job market or wages, and that's not come down. And so that's what he's kind of got in his crosshairs right now. And we saw that short-term rates traders had to start to adjust. Probably still fully didn't adjust to what was in the dot plots yesterday, right? We had 17 of the 19 FOMC members had their dot plots peaking somewhere above 5%, 5.125% next year, and the bond market just isn't there, right? The peak in the short-term rates market is 4.9%, which is still up from where it was pre-FOMC, but it's not quite there. So the bond market is not believing that the Fed can actually get to where it's pretty clearly telling us it's going to get to. And the equity market's struggling with this because what happens, right? So on the one hand, you've got to worry about, what does higher Fed funds mean for a multiple that you're going to put on any stock or on the indexes overall. And on the other hand, if you believe the bond market, we've got a recession coming forth in 2023 that's going to require the Fed to not only stop hiking, but to start cutting. And that's going to be negative for earnings. And so I think today was what you see in a sea of red today was the realization that, you're going to see some downside in earnings, and we can't start to anticipate looking through this with higher multiples to kind of soften the blow, because the Fed doesn't have our backs right now. And I think equity investors are starting to see some of that. And we've had, let's face it, we've had a really strong equity seasonality in October, November. So there's a lot of gains in there for shorter term accounts. And I think, there's a need to kind of lock in some of that, before December expiration, before the liquidity in the market really starts to dry up pretty considerably. And so I think that's been the juxtaposition that we've seen really in the equity markets for the better part of the last almost 6 months, right? Where we had this anticipation of negative data. We've had this anticipation of a hawkish Fed, but we've had on the flip side, very, very bearish positioning that you see in the commitment to traders data that is probably why you're not seeing the reaction in the VIX or the VVIX or the RVX the way you normally would, because perhaps a lot of tactical accounts are set up for a move lower and so aren't really worried about it and are using the options to kind of either roll hedges or take profits on these down moves. So a lot of different crosswinds, a lot of different moving parts, but I think For me, I look at it, and that's one of the things we wrote about is trying to kind of think about setting up for a bearish Q1. And that's kind of how I'm trying to approach the equity market for the next few months.
Well, you mentioned your approach. You always come armed with some interesting trading ideas. I know in the past you've had some fun time flies in the ags. This time we're going for a split strike fly out there in the equities to try to maybe get ahead of a bit of a recession out there. So, Rich, what are you looking at here? Break down your split strike fly. Easy for me to say. Split strike fly for our listeners.
A little bit of a tongue twister for sure. So looking out, this was one where I kind of trying to look through the end of the year. And there's, always, like I said, a little bit of the noise of the run-ups in the end of the year, early kind of sell-outs. So I'm just looking at the March expiration and saying, okay, I really was trying to come up with an idea that would look at the trends that we're seeing in the economy and the trends that we're seeing in terms of earnings, et cetera, and how we set up for that. And knowing that there is a fair bit of bearishness that's out there, right? And so perhaps we wouldn't see a rapid move lower because of what I talked about with the positioning, but we're still wanting to position for a move lower. And so the split strike flies, like looking at March, and getting long the 3900s, selling two of the 37s, and then buying one of the 36s. And so not symmetric, and doing that intentionally, being willing to spend a little bit more premium to do that, because I think if there's a risk of anything, it would be a risk that we would blow through that lower strike. I'm personally not one of thinking of the crash scenario, but I think if there's a higher odds of a risk of not getting the slow move lower, it's because we get a fast move lower, and I don't want to not make any money if we start to lose control on the downside. That's where I kind of did the split strike and made it a little bit more asymmetric, so that if we did blow through that by March, I would still have some gains to lock in. And the interesting thing is that the way you could kind of set it up, looking at the reward to risk on, taking it to the peak, the 3,700 strike, you're looking at almost 4.5 to 1 at the time we kind of look at it and put it together, which to me is, I'm always looking for those, as we talked about before, those, is finding as many of those really good reward to risk ideas that I can to pepper throughout the portfolio. And that's a good way for me to kind of build up the core of the portfolio.
Interesting stuff. You can check out the trade for yourselves. Rich, people, whenever you're on, people always ask us, where can I find the trade? You can find it over there at cmegroup.com. Just search for the Excell with options reports over there, and you will find he has that and many others over there for you folks to sink your teeth into over there. As we sink our teeth into some small caps right now, actually a decently active week out there for our friends, the small caps, about 20,000 contracts on the tape over there at CME. So small caps have been languishing for a little bit now that they're selling off pretty aggressively, off 1.14% just on the week, hanging out well shy of the 1800 level, 1776 right now, even though they have rallied a little bit from the nadir this morning. Obviously, that's driving some paper this week. And again, like a true equity, 35% of the paper is going up in the contract. That expires in about 3/4 of a day. So we'll go a little bit farther out to find a little bit more meat on the old bone. Let's go all the way out to the end of month DEES contract. That has 15 days to go exactly, listeners. We're hanging out there. What is the vol right now? 22 3/4. By the way, that contract hanging out at a 1789, so a little bit higher than the front month contract there. The vol 22 3/4, off about 2.5 points. So that lines up decently favorably with the RBX. RBX a little bit higher, obviously about 4 points higher. But that's because RBX, of course, listeners, is more of a rolling 30-day metric with some skew and other things baked in there. We're just looking at straight at the money vol 15 days out. So a little bit of a different beast. In terms of skew, last week the puts were heavily bid, 6.8% bid. This week coming in a bit, 4.3% bid. And the calls last week were 5.6% cheap. This week getting cheaper, 7.5% cheap. So the puts not quite as bid, the calls cheaper. So interesting stuff out there. Let's go see what is lighting it up out there. And it is the 1820 puts. So the puts going out tomorrow that are leading the dance out there this week with, looks like an 1800 again. These very tight verticals have been trading out here for some time. Looks like that's the case again this week. 1800, 1820 vertical going up nearly 1,000 contracts total, about 500 each leg out there. Looks like it traded Wednesday, and then it looks like they split it up. They traded the vertical on Wednesday. They traded 250 of the 1800 puts on Tuesday by themselves, and then about 250 of the 1820 puts today by themselves. So Maybe they're legging into it. Either way, weird stuff, or it could just be oddly similar paper going up on both strikes. Either way, 1800 and 1820 puts leading your dance out there in the rut, as we are well below that strike now, 1776 out here, listeners. Also worth noting was some upside as well. 1870 calls are pretty active on Wednesday, total of close to 500 going up on the week, as well as about the 1855 calls doing about 300 contracts this week. Any other interesting paper? Yeah, 1770 puts. That's more along the lines of what I expected. That's pretty much an at-the-money put, listeners. Going up in that end-of-month contract, that's done about 500 contracts this week. Almost all of that today. So folks piling into the 1770 end-of-month puts today makes a ton of sense. That's pretty much exactly or close to where we're hanging out. And looking for a little bit of maybe a little bit more downside action, or maybe looking for a bounce, selling that puts. Also saw the 1800 puts in the end of the month and 1690 puts. So all puts in that range, all very active out there, all today. So interesting. This sell-off today, this post-Powell sell-off, driving a ton of put paper out here in small caps. Again, hard to fault folks, given what we're seeing out there. If you want to go a little bit farther out, let's go all the way out to March. The March 1500 puts doing nearly 400 contracts this week. So some folks really getting out there. 1500, that's 276 handles from where we're trading right now. But folks trading fast and furious out there as well. So a lot of interesting stuff to be found out here in small caps this week. All right, Rich, we've hit on equities. We've hit on energy. There's a lot of other complexes lighting up our movers and shakers this week. We have ags. We even have a taste of FX. So we can hit one of those complexes or we can go somewhere else. Dealer's choice, Rich. What is lighting up your tape this week?
Well, I would like to say FX because it's not always that we get to talk about FX.
No,
on the movers and
no,
shakers,
we do not. I can't. It's probably been the last time I talked with you, the last time we talked about FX on the show. So let's go to there now. A little bit of the old FX, listeners.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, everybody. Welcome to FX. I had to dust off that drop. Listen, make sure that it even still works out there. Now, I mentioned earlier, first off, to find FX, you probably don't even know where it is. Never talked about it in the show quite some time. We go all the way down, go below equities, one more slot to FX. Obviously, it's an alpha order list, listeners. And then we usually hang out in the FX major. That's probably where we're going to hang out again today. I mentioned the peso USD is lighting up our movers and shakers this week. Unfortunately, there's only a whopping 2 contracts going up in the peso USD this week. So not a ton of for us to sink our teeth into out there. Instead, Mr. Rich, I'll let you pick our poison. Which peer, or maybe multiple peers, are catching your eye out there in FX this week?
Well, the two that I think are most interesting to watch are watching, looking at the yen and looking at the euro. I mean, those are the two that I think always kind of stand out. Those have been some huge movers this year. And so are we starting to see a little bit of an about face and a reversal of that weakness that we've seen, the dollar strength, the dollar wrecking ball, as some people call it, versus the weakness we've seen in Japan and the weakness we've seen in Europe. And we've in this period of move towards back to risk on, if you will, and some of that we've seen in some of the equity parts of it. We've seen a little bit more of that same sort of risk on flavor, if you will, as the dollar has been kind of coming off its peak. And then ultimately we've seen the same thing happening in China as well. And so maybe that's setting the tone for a little bit more positive risk flavor as we kind of go into 2023. But those major moves, those big trends that we've seen seem to have a little bit of reversal to them as we kind of end the year right now. And you see that the most in these major currency pairs.
Let's go check out some of these major currency pairs. The big dog out there in the FX complex is Euro USD, listeners. We're going to hang out there. About 95,000 contracts on the tape, almost 100K. That's a pretty active week. By comparison, only about 17,000 contracts going up in the yen USD. No slouch, but Euro USD is where the action is. As Rich alluded to, we've been talking about this parity story, about the strong dollar story versus the euro for quite some time. I was hearing all sorts of stories this week from Bloomberg and the Journal and others about the rash of Americans going over to Europe, taking advantage of the strong dollar, gobbling up luxury goods for Black Friday and other areas out there. So the American consumer traveling abroad and and taken over for some of the Chinese consumers and others that were buying all those luxury goods in Europe back in the day. Now we're seeing the Euro USD still hanging out close to parity, about 1.07 coming into the start of the show. And again, of that almost 100,000 contracts on the tape right now, a 27.1% going up in the March contract. So extending out into next year. So we'll hang our hat out there. It has about 78 days to go. So a little bit of longer term action out here in the Euro USD this week. And again, that future at the same level, 1.07 out there in March as well. In terms of vol, again, this is one of the reasons why we don't often talk about FX on the show, listeners, is the vol is a whopping 8.1 to be precise. That's off nearly a full point. So that's almost a Volmageddon for FX. When you're only starting at about a 9 and you lose a full point on a week, that's a lot of vol to come off. In terms of skew, the puts last week, 5.1% bid out in March. This week, 6.5% bid. So the puts catching a bit of a bid. The calls last week, 3% cheap. This week, 2.9% cheap. So not a heck of a lot of evolution in the calls out here this week. And in terms of action, what was the most active contract out here? It was the March 1.01 puts. So pretty much close to parity puts out here, listeners, doing 5,100 contracts this week. The big day was Monday, almost 3,000, 2,900 going up on Monday, all of that opening. So folks were piling into that. In fact, it looks like there was a 1.01, 1.05 vertical in March going up on Monday, 2,912 times, because opening on both legs, that's pretty much was driving all the paper out there. We also saw 1,400 of the 1.01 puts going up on Wednesday. It looks like all of that closing. So maybe they put on that vertical on Monday, then they took off half of the lower leg on Wednesday. Interesting. Either way, it looks like there's still about 2,200 contracts open on this strike, but looks like they may have put on the spread and then legged out a half of it a couple of days later. Also worth noting, someone put on 1,400 of the 1.05 puts again today. So these two strikes have been pretty hot all week long. Also worth noting, the 1.1 calls were lighting it up. And all of that today, we saw 4,296 going up this week. 4,212 have traded today. So, yeah, those are probably opening. Spoiler alert, only 400 were open coming into this morning. So a lot of people flocking into March, into the 1.1 calls and the 1.01, 1.05 put vertical out there in Euro USD. Interesting stuff out here. Also worth noting, if you want something a little bit closer to home, we've got the D's contract expiring in about a day, the 1.055. So the double puts out here trading pretty actively this week as well. 3,000 yesterday, 1,700 on Tuesday, about 500 on Monday, closing all week long, only 3 today. So 5,100 gone up this week. Looks like all closing. So folks are bailing on the 1.055 puts and have been all week long. Again, they're going out tomorrow, so they were getting what little juice they had left for these things. Also worth noting, we saw about almost 4,000 of the 1.0675s. I love these strikes. Puts going up this week. 3,100 of that trading today. So a lot of action on those as well. Those are obviously going out tomorrow. Looks like that's opening as well, because there's only about 2,800 contracts open here. So opening 1.0675 put paper. We're pretty close to at the money there. So kind of a bit of a coin flip whether those are going to work out or not. Let's look really quickly to see if we see any other interesting and or aberrant paper out here. Listeners, 1.095 calls out here in February, going up 1,500 times this week. Getting a little bit below parity. We also got the 0.935 puts going up in June, 1,100 times out here on Wednesday. All that traded on Wednesday, all that opening. Nothing else for the rest of the week. So interesting pockets of liquidity going up out here this week in the Euro USD. All right, we hit on FX, we hit on equities, we hit on energy. Looking at our movers and shakers, we've also got a ton of ags lighting it up once again this week, listeners. So off to the ags we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners. Head on into that drop down one final time, pop out of FX, go all the way to the top of the list for ags. And then from there, it's an embarrassment of riches. Listeners, we got lumber. Already talked about lumber, not exactly a ton of paper out there. Also have lean hogs, also have soybean meal in our movers and shakers this week. Rich, the last time you and I chatted, you had some interesting time flies going on out there in the ag market. So what, if anything, is lighting up your tape in the world of ags this week?
Well, you mentioned lumber. Lumber to me is the one to watch, because that to me is the leading indicator for housing, which is the leading indicator for the economy, which is the leading indicator for all of our markets. And so I think that to me is the one that's most interesting and probably in the most flux as we kind of go into potentially a spring building season. So I'm closely watching that lumber market. But let's face it, like inflation's have been a big part of the story this year, and a lot of that inflation's been coming from the prices of food. So what we're seeing in the protein, or what we're seeing in the grains is super interesting to kind of keep an eye on too.
Well, we've talked about soybeans and soybean meal quite a bit on the show recently. They've been on our movers shakers a lot this week, so we're not going to hit soybean meal. Lumber, for obvious reasons, can't really break them down. So let's go to our number 3 offender this week to the dark side. Back out to the livestock. Haven't been out there in a little bit, listeners. In particular, lean hogs. This contract, as I mentioned at the top of the show, starting to put up more respectable numbers. 33,000 contracts on the tape right now. So that's more than a lot of the other products we may talk about here on the show today. So interesting stuff. Also starting to get a little bit more, I think, approachable. Maybe not quite there yet, but starting to get more approachable for your retail folks out there who are looking for a little bit more liquidity, a little bit more ease of access to these types of markets. Again, go to that ags drop down, listeners, and go down 5 slots to livestock, and then pop it on over into lean hogs. For those of you who don't follow lean hogs day to day, we're at about an 81.825 in that front contract. And that is also where 73% of the 33,000 contracts this week traded. So a lot of concentration of liquidity in that front contract. That is the Feb contract, by the way. That has almost 61 days to go. So we're talking about a very long-term contract here. By comparison, when we talk about the equities, 90% of the volume is much shorter dated than all of this. So intriguing long-term perspective here in the lean hogs. In terms of vol, what is the vol in the lean hogs these days? 26.64, off exactly a point this week. So lean hog vol lining up actually a little bit more frothy than what we're seeing out there in a lot of the equities right now. So to give you some frame of reference, in terms of skew last week, the puts 3.1% bid this week, 6.4% bid. So puts get a little bit juicier. And the calls last week were phenomenally bid, 12.4% bid. Huge premium to the calls last week. This week, only 4.8% cheap. So they've swung entirely in the other direction. They came in 12.4 points, and then they continued to decline another 4.8 points to a discount to the at-the-money vol. So a huge swing in the calls out there. Let's see if we can figure out what's lurking behind that, listeners. The most active contract this week of that 33,000 contracts, it was the 80 puts, doing 1,673 contracts. This one's been active all week long, 400 to 500 contracts a day, pretty much all week long. Looks like opening most of the week with the exception of Monday. Also, the 76 puts right behind it. I said we're trading at an 81.8. So 80 puts and 76 puts, your 2 leading offenders this week. 76 puts also pretty active. The big day for them actually was Wednesday, almost 1,000 going up on Wednesday. The other about 500 scattered throughout the week. Looks like opening all week long for the 76 puts. I don't see any rolling action here. Nothing really lining up from a 76-80 put roll action. Just seems like a lot of action on both strikes. And then we saw some calls, the 1284 calls, and this is probably going to account for why we saw so much downside in that skew this week, listeners, because someone was bailing on the 96 calls pretty much all week long. 1,300 of them traded this week. The big day was Wednesday, 750. The rest scattered throughout the week, and it was closing every day this week. So it's like someone maybe getting the heck out of Dodge on the 96 calls and taking a lot of that call skew with them. Also worth noting, 1,200 of the 84 puts going up this week, and those were about, again, 500 today. The rest scattered throughout the week. And also 91 calls also trading this week, 1,100 times. Again, the big day was Wednesday. Maybe it was a 96-91 roll here. It looks like about 896 calls traded on Wednesday, mostly closing. 932 of the 91 calls traded on Wednesday as well, mostly opening. So maybe someone getting the heck out of the upside calls, rolling to a little bit closer strike. Either way, something really just annihilated all that call skew out there in the hogs listening, which is interesting stuff as we keep on rolling. Speaking of interesting stuff, you folks always have intriguing stuff in store for us. So let's head out to your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback segment, the portion of the show where you folks ask us questions. We also turn the spotlight back on you. Like we asked you last week, what is your favorite new option product that you've been trading and you've added to your trading arsenal this year? Gave you 3 choices, and the infamous other gave you BITO options. So the Bitcoin options out there for you folks. Those are pretty active. A lot of folks liking those these days. The SPX daily options, those are also very active. And then your universe of volatility ETPs out there, your SVIXs, your UVIXs, your SPKYs, and so on and so forth. And the SPX daily options ran away with it, listeners. 71% of it. You folks are loving very near dated S&P options trading right now. 71%. And again, looking at the numbers out there, they don't lie. It's an explosion of zero DTE trading out there right now. Distant number 2 for BITO options, 16.1%. And then bringing up the rare, the vol ETPs, only 9.7% out there. Only 3% of you choosing other. Not a lot of interesting write-ins, so nothing worth mentioning there. As we get into the trade and the question for this week, Rich. Our question, this one is an intriguing one, a very timely one. We're asking folks out there, which option strategy have you used the most in 2022? We gave you 4 choices. Again, if you don't see yours, feel free to write in. We've already had a lot of write-ins for butterflies and strangles and those types of trades. So if we were allowed to have maybe a 5th slot, listeners, we probably would have put that in there. But we gave you these 4 choices. Your butterflies and condors, so your spreads with wings. And then your long calls or call spreads. Your long puts and put spreads. And then your short puts and put spreads. Rich, when you're not talking to us, you're out there engaging with a lot of folks on the options trading front and seeing what they're up to. So I'm curious for you, maybe we'll start just there. What have you been trading the most this year? Maybe you have a different suggestion than what we have on our list. And then B, what do you think our audience is choosing for their option strategy of the year?
Well, that's a really good question. I would say, what have I been trading the most this year? I've been trading the most, I would say it's not quite on the list though. It's put spreads, but it's ratio put spreads. 1x2 put spreads that I've been doing over the top of some short positions as a way to add some leverage. I've done different things. I just find that I like to do both ratio put and call spreads over the underlying positions that I have. And I probably have done more put than call spreads across the different products, it would be my guess. But as far as your listeners go, that's a really good question. I'm going to guess more long calls or long call spreads.
I'm with you on the ratio put spreads. We'll include that in the long put spread category, Rich. You can play there. That'll be your choice there. But I like myself a good 1x2 as well. I've been using a few of those this year. But right now, listeners, you guys and gals are running away with it. Short puts, Rich. Short puts and put spreads. Wow. Exactly a third, 33.3%. So sounds like a lot of folks are starting to use short puts maybe to nibble on some names that they think have been a little bit beaten up. Followed by number 2, long calls and call spreads, 26.3%. And then number 3, butterflies, condors, all your spreads with wings, 22.8%. And then, Rich, this one surprised me. Bringing up the rear on a year that has been mostly red, you'd think long puts would be doing a little bit better. Only 17.5% of them choosing long puts and put spreads. So intriguing results. Listeners, are you surprised? If you want to get your voice in there, you have about exactly a day left. When you hear this on the podcast feed, when it hits the network later today, you'll have about exactly a day left to make your voice heard over there. At Options is the place you need to go. All right, listeners, that music means we have to get on out of here for TWIFO this week. But Mr. Rich, if folks are intrigued by your split strike fly over there in equities, maybe they want to learn more, maybe they want to see the other trades you've been writing up over there, where should they go? What should they do, Rich?
Well, there's a few places. You can go to the CMEgroup.com and look at the Excell with options. We talk about all the different products, and coming up, we're going to have a year review where we look back at all the different ideas that we've had this year and whether or not they've worked. So that's definitely the best place to find me. But you can find me on Twitter at Excell Richard. You can find me on LinkedIn, and you can find me on Substack. It's stayvigilant.substack.com. Where I write on a daily and a weekly basis across all the different platforms.
I like that. We'll have to have you back on in the new year so we can look back at your trades from last year and see which ones perform well, which ones didn't. There's always some learning to be done in those, Rich.
Absolutely. And I think it's important for all traders to kind of go back and say, okay, what did I get right? What did I get wrong? And how can I improve my process?
Check them out over there. It's Excell, EXCE, 2 L's over there with options at CME. Or check them out at all the other outlets he just mentioned. Of course, while you're hanging out over there at CME, you know to check out our TWIFO report. CMEgroup.com/TWIFO is the place to go for all that fun information and a whole bunch more. And last, but certainly not least, you want to learn about everything that's going on in the world of small caps. And given the price action out there lately, why wouldn't you? There's only one place to go, FTSERussell.com. FTSERussell.com is the place to go for the latest data on correlations, price action, volatility, COVID impact, all that, and a whole bunch more. And of course, give them a follow on Twitter while you're at it as well, at FTSE Russell, all one word. A lot of great data coming out in between episodes of the show on some intriguing areas that maybe you haven't considered before. A lot of fun stuff going over there. At FTSE Russell on Twitter is the place to go. We got to get on out of here. Back again tomorrow, listeners, noon Central, 1 p.m. Eastern for Volatility Views, where we break down all the action from the week from a volatility perspective. Then, because we like you pro folks, back again with Double Pro Week after that. We got Options Oddities coming up at 2 o'clock, where we break down the entire week worth of unusual activity, and I'll maybe make a few interesting and or dubious trades of our own. And then coming up after that, because we love you folks, 3 o'clock, we're going to have yet another pro Q&A session, this time with the one, the only Uncle Mike Tusaw. So get your questions in there now for that as well. And then back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.